Good evening, everyone, and thank you for joining us. My name's Chris Britton, and I'm happy to be your moderator tonight. For those of you who don't know me, I'm a CPA, CA, and a tax and estate planning specialist. I am the founder of and president of Martello Wealth Advisory Incorporated. I have over 20 years of experience advising business owners and high net worth clients in compensation planning, corporate structuring, insurance, and will and estate planning. And I'd like to start off by, first of all, thanking our panel tonight. And our panel is Robert Dean, Kelly Powell, Dr. Scott MacLean, and thanks for taking time out of your busy schedules to share your expertise with us. Also give a brief introduction of each. Dr. Scott MacLean has lectured across Canada, the US, as well as Spain, the UK, and Australia. He's graduated from the Dalhousie Dental School and was his class valedictorian in 1991. He's taught at the Dalhousie Dental Clinic for more than 15 years and working in areas of implant elective, aesthetic elective, and general dentistry areas. He's also a member of numerous international associations, but he was just sharing with me that just on the weekend, he was admitted as a fellow of the Greater New York Academy of Prosthodontics. Next, we have Robert Dean. Robert Dean's a CPA, CA, CFP, TEP, and he's the regional tax leader with MMP Atlantic. He's located in Dartmouth, and Rob helps owner managers achieve their business and personal goals by asking unique questions and listening attentively so he can provide customized solutions and deliver results. And he also has 20 years experience. In fact, he and I wrote our CAs together back 100 years ago. And finally, we have Kelly Powell, who's a lawyer with BOYNECLARKE. Kelly practices in the area of corporate and commercial law and business law, and he helps business clients from a wide range of sectors, including professional, retail, real estate development, banking, and industrial. And he focuses his practice on business structuring, business financing, and the acquisition of sale of businesses and commercial real estate. And finally, although not a panel member, we're very happy to have the president of dentalcorp in attendance with us tonight, Guillemini, and he is ready to chime in and provide further insight into any of the topics that are relevant for that. So I'd like to start off with a question for Kelly. Kelly, given the uncertainties in the market today, what are you recommending your clients do to protect themselves?
Well, basically, the way I look at it, when you mentioned uncertainties, obviously 2020 has been a roller coaster for everyone. But to be honest, the way I see things is that the market's always going to be uncertain. So I'm advising clients to do, what they always should be doing. So in terms of whether you're buying or selling, the focus of a lot of what I'm going to say is based on selling, but, be proactive, plan ahead, and start early. That's really the most important thing. So, everything's taking longer this year because of COVID. Everything you do in life, and buying or selling a dental practice is no different. Every part of the process is taking longer. So what can you do to solve this problem? Meet with your advisors early. And when I say advisors, financial planner, banker, insurance broker, accountant, lawyer, practice broker. If you're selling, get your valuation done. And again, try to be as proactive as possible. So how does this look as an example? So if you're purchasing, you want to start meeting with your advisors and engaging them as soon as you find a practice, but preferably before. And, again, when I mentioned things take longer, financing always takes forever. I always tell clients, give the banks as much time as possible. And they just need more time now because of COVID. So that's on the purchase side. On the sales side, it's a little bit more complicated. There's a lot more moving parts. Typically, we recommend to dentists, try to give your advisors 2 years lead time. Now that's optimal. It never happens. but the reason we suggest that is because, for tax planning and ensuring that we have everything in order with respect to your corporate structure. So the key driver in this is the capital gains exemption. So I'm sure a lot of you are familiar with this, but for those that aren't, if you sell shares in your dental practice, there's a bunch of requirements that have to be met first. But if your shares meet all the requirements, you have a capital gains exemption. It's a lifetime exemption. It's currently $883,000. It typically goes up every year, but that's where it is now. So if you sell your practice for $1 million, the first $883,000 is exempt from capital gains tax. So that's a huge advantage. But you have to qualify, and CRA has requirements and regulations that you have to meet. So you can't just call up your accountant and lawyer a couple months before you want to sell and say, hey, I want to sell. These things take time. They shouldn't be rushed. They need to be done properly. And it's very important. If you don't do that part properly, your potential tax consequences could be 6 figures. And that's not, from a $10 million practice. If you have $1 million practice, so the valuation comes in at around $1 million, you can easily have a 6-figure tax issue if you don't plan ahead and start early and engage your advisors. So that's on the tax side. Getting your house in order and keeping it in order, that includes all of your documents. A sale is kind of like, explain to people, it's kind of like a CRA tax audit. There's a lot to it. It's not fun. The other side is going to be asking you for a ton of stuff, especially if you're selling. And, you want to make sure your documents are all up to date. Employment agreements, associate agreements, your cost share agreement or shareholders agreements. And this seems like common sense, but you wouldn't believe the issues that come up. Like, for example, just trying to locate documents. And I'm talking about contracts with third parties. Third parties are, your landlord. So premises lease, equipment leases, financing documents from your bank, previous loans, lines of credit, all that stuff, and your corporate documents, your corporate minute book. Lawyers and accountants waste a lot of time working with clients, trying to just figure out where these documents are. And the bottom line is time is money. And if we have to, if everyone's looking for this stuff, it's during a transaction where you have tight timelines. You don't want to be wasting time doing that. So get your house in order early. It's a good practice to do it from the start, but we all know people aren't as organized as they like to be. So get everything in order, including your corporate structure. And, basically plan for the worst, but hope for the best. And, also that means control what you can control. So, the important things are have a good team at the practice level and, sell when you want to sell, not when you're forced to sell. And if you plan ahead and plan early, I think you'll be in good stead.
I think that's good advice. I think that, retroactive planning is always not as efficient as proactive planning, especially from a tax perspective and trying to maximize after-tax values and everything else. So I think that's a good segue into the next question for Rob. Rob, how are you seeing valuations being impacted in today's environment, and how do you see it being impacted on a go-forward basis?
Well, thanks, Chris. That's actually kind of an interesting question in that the basis of the valuation stays the same. Most practices are valued on an evaluation of the ongoing cash flow that it's able to produce. You might hear the terms EBITDA or pre-tax earnings, those types of things as the baseline of it. When we look at that, it is usually factored by a multiple, and everybody wants to know what that is. And that's more of an art than a science. But the easiest way to look at it is the higher the uncertainty, the lower the multiple. The lower the uncertainty, the higher the multiple. You want strong, regular, predictable cash flows. So if we look back to the beginning of the pandemic, where we were all as a community, as a business community, as a nation, as a globe, really, we're sort of in a high degree of uncertainty, trying to figure out where things were going. Valuations were immediately impacted. We could see a number of deals that had been taken off the table and were re-offered with substantial discounts put in place because people just didn't know what was going on. As time progressed, we saw those valuations coming back, but what we still see is that uncertainty factor that's in there. What ends up happening is then through the deal process that you see that the uncertainty is usually shared, and that factors within the deal, be it a guarantee of a certain EBITDA, be it a guarantee of a certain revenue level, or a increase in the vendor take back type things, are all factors that are in there to help mitigate that uncertainty. The fact is, nobody knows, either the person is buying or the person is selling, what a year, month, or a week from now may be. But certainly we have more clarity of vision of what the longer term would be than not. So most practices are done as a long-term purchase. Valuations are still strong, and I do expect that, although I think we will talk, as Kelly mentioned, about having things in order, to having things more certainty around your practice. You'll see that the stronger, more well-organized practices will value higher, and those which are not as prepared for future bumps in the road will value lower.
Okay, thanks, Rob. Scott, from a clinical perspective, how have you and your team adapted to this environment with COVID?
Well, thanks, Chris. It's a pleasure to be here tonight. And talking about COVID, I remember back when this all started, and it was a big sense of fear because I didn't really know what to expect, and tried to learn as much as I could, tried to understand the rules, got involved with different associations to be on the committees and stuff. But going forward, we realized that we had to do our normal sterilization stuff, as all the dentists would know. But getting PPE was a real fear. And I was trying to get PPE early, trying to establish the lines of that, and it just wasn't happening. And I was trying to buy it from Amazon and doing all these different things. So there was a big sense of fear within our practice, and trying to contact your team and talk to them over, how can we talk to them? How can we get them back to the point of being able to participate in the office again? Because the sense of fear was very real. And this limbic response is the real gut feeling. And I've never really had that sense of uncertainty and really understanding that. So as we went forward, we were fortunate. We were in the 12th hour of negotiations with dentalcorp. And so I'm also thinking of that's good and bad, because we actually stopped the negotiation and then went forward, and we kind of were trying to figure things out. But as we kind of went through, we got involved with dentalcorp even on a non-partner basis. They were helping us before we even joined dentalcorp, getting us to secure different things. We were going to buy a washer and dryer, for instance, and we're told, don't do that. We have solutions that are going to be cost effective. And so it was really quite something, because I don't even have to think about that now, because I have all this stuff in my basement still, maybe that is going to be, thrown away, whatever. But we have been able to be part of dentalcorp early. And so I think this sense of uncertainty was really what I had to deal with a lot. And having someone to kind of help us through some of these things was, I think, a real help. And when we got back into the office, it was, again, we had to do scripting, had to talk to people. We hit the ground running, though. We were hitting the ground at about 130% production, and people have been waiting, and we have not stopped. We have scripting that we talk to the patients about, what we say, what we don't say. And so it's, a big educational process to go through. And I did a lot of that through the internet and trying to understand what patients really wanted to hear at that point.
I see. Thank you for that, Scott. Back to Kelly. Kelly, how have standard purchase agreements been affected in today's environment?
Well, one would think there'd be a lot of changes, but honestly, they haven't really changed that much. And the biggest change we're seeing is that, there's certain clauses have been added to address, pandemic type delays. So, pre-COVID, we'd have clauses called force majeure clauses, and basically what that boils down to is if there's major interruptions in society, like acts of God, war, things like that, there'd be kind of a delay in or suspension to certain obligations that have to be met within the agreement and within the transaction. So that really hasn't changed, but what has changed is these clauses are now more tailored towards a pandemic like COVID. So for example, there's certain triggers or thresholds that have to be met. For example, they may reference a specific public health order that shuts down the practice. So, and then there's a method by which once that trigger is met, kind of how the transaction proceeds from there. So the best way to illustrate this is by example. So let's just say you're selling your practice, and we hit the third wave in the summer, and you're selling in the summer. So the agreement, if it's drafted kind of how I'm describing, it will envision some sort of public health order, shutdown of your practice. And let's just say that shutdown lasts for 2 months. How these clauses work would be the obligations of both parties under the agreement are basically suspended for that period of time. And then once kind of society kind of gets back on track, everything within the transaction resumes. Because without these clauses, people would just walk away from the transaction, which could happen anyway. You can't prevent that from happening, but we're seeing these clauses more tailored to the COVID issues that we're facing, in 2020, and how it actually affects the dental practice.
See, okay, back to Rob. Rob, in terms of deals, have you seen any revised structures in your practice, or to account for risks associated with COVID and the uncertainty in the industry?
For the actual sale of the practice, we're not seeing much of a change. There's basically, you can either sell the assets of a practice, you can sell the shares of the practice, which Kelly discussed earlier, or you can do a combination of two, often referred to as a hybrid. Those basic structures are the same, are common through any type of a sale that you're going to have, whether it's a dental practice or a garage or a financial advisory shop, just in case you're planning on selling that, Chris. What we're seeing though is that the deals themselves, much as just Kelly has evolved, are evolving in themselves. So there is more of an emphasis on due diligence. There is more of an emphasis on understanding the business itself. It's understanding what the risk and mitigation is, understanding how that can affect both the buyer and the seller. As Kelly alluded to, then also envisioning that there is more uncertainty now than we have seen previously, or recognition that we didn't maybe account for it as well as we should have in the past. And now we're coming to a realization that those types of unknowns have to be factored in. So something that would happen before is that you would have something like a very common, something called a vendor take back. When a person would sell a business, they would be paid a certain amount up front and a certain amount later on in the transaction, accounting for anything that came out of the woodwork, so to speak. It wouldn't be uncommon then for that to be done as a loan, and it would have specific payment dates. Well, that is all predicated on the business carrying on and so forth. So now we're seeing that those loan documents are being included with, as Kelly had said previously, an interrupter style clause where if the business was to cease, then everything sort of shifts along. Unfortunately, if you don't take the time to sit back and envision these things and have a plan of how to deal with uncertainty, you just sort of go, okay, well, we'll go and deal with it when it gets there. Unfortunately, what ends up happening, you get into conflict So one party thinks it should be one way, the other party thinks it should be another way. I know it's disrespect to Kelly, but he does have a fine group of litigators on one side, and they make a fine living out of trying to resolve those disputes. It ends up being a lot of time, a lot of money, and a lot of emotional cost after the business has been sold. It's not a place you want to be into. So echoing Kelly's comments again, was that having that lead-in time to take the time and spend thinking out what possibilities might happen and how you're going to deal with that if they were to happen is a really important part of an asset sale, a share sale, or a hybrid sale.
And what I find interesting about structuring sales, and most people would think that you would automatically want to be drawn to as a seller selling shares because of the capital gains exemption. But sometimes the buyer is willing to pay significantly more for assets because they can write them off. And so given that in the dental field, what percentage have you, in your experience, seen of people selling shares versus people selling assets versus hybrid type transactions?
It's been generally the circumstances are really there based on the match between the buyer and the seller. If you're dealing with a larger organization such as a dental corp, it tends to be more along the lines of a hybrid transaction. They have the resources and the understanding of that. That takes a fair bit of finesse to get to happen properly, and you really want to have that group and team together that understand that. That wouldn't be something that someone on a one-off basis would do. If you're looking at a share sale, which is probably most common, that is typically where you're going to have a buyer and seller who are of similar nature, and the value of the tax has made it beneficial for the family, or they've structured themselves properly. They've had a family trust, and that value is actually quite substantial. So it tends to shift towards a share sale. Asset sales tend to be more in a distress piece where someone needs to get out of the business in a hurry. They need to transfer their businesses quickly. I would say any sort of relation between those is probably anecdotal. I would say somewhere in the 20% you're seeing in the hybrid, and you're probably seeing about 50% in shares, and the remaining 30 in asset sales.
Yeah, just one final point on that you made with the family trust, and what the family trust allows you to do is actually have more than one capital gains exemption potentially with a sale of shares, which can be very effective from a tax planning standpoint.
Absolutely.
Scott, back to you. What led you to choose dentalcorp as a partner? How's it been so far? And follow up to that, how did you evaluate your decision to partner with dentalcorp relative to any other options you may have had?
Well, Chris, a lot of it has to do with, I'm getting a little bit older, but I'm still feel that I'm young and I want to work in a long time. And so I enjoy work, but one of the things that kind of was the nidus for this was probably talking to my friend Corey Sears, who was working with dentalcorp, and I considered him a real quality person. And I was encouraged to kind of investigate a little bit more, and met some of the people from dentalcorp, like the Nate. Nate was, we spent a little time at different events too, and I got to know him, and I got to really understand that there's a real quality to this company, and try to understand a little bit more. And so as I looked into it, I certainly talked to my accountant and lawyer, who were both friends, and found out what was going on. But my goal was really to understand, what's to go forward for me as a dentist, because this is my baby, and I've grown this practice for a long time. And, you want to keep your sense of autonomy. And that sense of autonomy is so important to most dentists. And so the good thing is I haven't lost that. I'm still Trimac Dental Center and Dr. Scott MacLean. There's not a fingerprint that's on me that's saying do it this way or do it that way. It's more of a sense of encouragement to take advantage of different tax savings, to take advantage of how I buy things, to take advantage of how I hire people. There's all kinds of qualitative things that I've really enjoyed being part of dentalcorp. And so I've only been a partner for a little bit. Yes, there's stress that you have to go through. That's you have to put your big boy pants on, as my wife says, and deal with that. And so it's just part of dealing with life, you know. But once you're on the team and you're on the other side, my thought is I want this company to flourish. I know how strong they were in negotiations. I appreciate that because that means that it's a good company. They're doing time to investigate what I'm like as a person. And I appreciate that because they're going to do that forward. And I'm a shareholder in dentalcorp. So therefore, they're going to be looking after my money again, for me, looking at other practices and bringing quality people in. And I think that is really important. I've always been kind of a team person, playing sports with football teams, basketball teams. And I like that aspect of having someone there to bounce this off. Now I have two partners who have been very close friends as well, but bouncing things off a bigger entity and understanding, that there's a big world going on there. So one of the big things that really made me think about this is the capital gain exemption. Because I did do some tax planning with family trusts and different things. And so the advice was, I actually did pretty well with that type of following the rules and doing what I'm supposed to do. But my worry is I watched my kids getting $2,000 checks laying at home. And, I'm going, okay, this doesn't make sense, this CERB stuff. And how are we going to pay for all this? Last year, I lost a whole evening of sleep because they took away the spousal sharing of income tax or of money, of income. And my worry is that there's going to be changes in how capital gains are even dealt with because the government's going to have to do some serious fundraising. And so I see that this may be an issue. So I wanted to try to take advantage of that. I still continue to work and do my employment as I always did, except I have a team that's supporting me, the Jackie Barlows, the different people, the Maras, the Julie, who's helping me get an associate, the different people involved with the company, and the Guy, who's helping me, by leading a good company. So there's a lot of people that I've met through this, the Riches, I know them by first name already. And so I think that it's been a very positive type of leap forward, and I'm still doing what I do best is to work on patients, take care of the patient, let the money take care of itself, except now I have someone looking after me as well over my shoulder. And I know that they have depth of people that have so much experience to kind of deal with the things that I need to deal with as a dentist.
Thank you for that. Next question is for Kelly. Kelly, what advice do you have for dentists planning for the next phase of their career?
Well, probably the most important thing, I kind of touched on it earlier, but I'll expand a little, is, plan on selling early. And what does early mean? It's going to mean different things for different dentists, but essentially, early means before you envision selling. So, if you think you're going to retire at 65, you kind of pick that date and then you work backwards from that. So, for example, if you say, okay, I'm going to retire at 65, if you give yourself 5 to 7 years prior to that, it creates a lot of advantages. And, I preach to this to all my clients, and my wife's a dentist, and I've been preaching it to her for years. And strangely enough, she actually took my advice, and this year she's selling her practice. And I know I'm not going to give away her age because she'd probably shoot me, but I'll just say she's a lot younger than 65. But the reason I preach this is because, again, if we use 65 as an example, you work backwards and you say, okay, 5 to 7 years before that, what advantages are created for you? Number one, you have more time for the tax planning that we talked about before. But also you're more in control over how the transaction is going to play out. And, no matter who we are, we're all going to have health issues. Doesn't matter what age. So ideally, you want to sell a dental practice when the value is maximized. And, the best way to do that is sell when you're healthy and before health becomes an issue. So, everyone can relate to the example of, you're working one day, you have the drill in your hand and you have a minor pain. And you say, that's nothing, it'll be better tomorrow. And it is better tomorrow. And then you get the same thing a month later. It's fine, resolved itself before, no problem. And then, let's say if it's arthritis, the arthritis starts to creep in more and more. And then, you go from like, you have an issue once a month, you have an issue once a week, then you're having an issue every single day. And, from my perspective, I don't want to see a client in the situation where, they have to work because they need to maintain the practice. They need to support their family. They also, most dentists feel a duty and obligation to their staff. They're, their valued team, and they want to try to keep things running as long as they can to kind of support the entire practice. So, again, I mentioned it before, you want to sell when you want to sell, not when you're forced to sell. And, the fact that health is a key driver, it affects a number of things. It affects your ability to work, but also just as important, it affects the value of your practice. So, I'd argue that most dentists would probably reach kind of their maximum efficiency in late 40s, early 50s. You've been practicing for roughly 20 years, give or take, and everything's running great. You figured out how to manage the practice, manage staff. You have a great team working for you. Everything's running tickety-boo. So that's all fine and dandy, but then if there's any health issues that creep in, it affects your ability to work, and it's gonna ultimately affect the value of your practice. So if once you reach that maximum level, there's only a limited number of things you can do to actually increase the value of your practice. It's adding more staff, more associates, or physically expanding your premises. And a lot of dentists aren't prepared or willing to do that. So the way I look at it is, if you think you're at maximum efficiency, you should at least start thinking about a timeline for not only retirement, because everyone focuses on retirement, but what I'm saying is focus on, work back from that. When would be an ideal time to sell? And part of that analysis is going to come from, what the transaction looks like and what purchasers are looking for. So not all purchasers, but many purchasers will be interested in you staying on as an associate. It helps with the transition of patients. It helps with the transition of staff. And, ideally you want if you can stay on for 5 to 7 years, and that's why I kind of mentioned 5 to 7 years as an example, that will make your practice a lot more attractive to a purchaser, because they know that, okay, if they're willing to stay on for 5 to 7 years, me, the purchaser, will be coming in. The existing dentist will stay on as an associate, and we can maximize the revenue for the practice. So it's not, and again, some purchasers are just, if it's one dentist buying you out, there may not be enough patients to sustain, both you as the seller and the purchaser. I get that. But what I'm saying is, if you plan 5 to 7 years before you retire, you at least give a purchaser that option, and sometimes you can work things out with them, or come up with some sort of compromise that works well for both parties.
Well, I think that I think that's very good advice, but I also think it's like anything in life. You never maximize value if you're forced to sell something. So I think that makes a lot of sense. Rob, back to you. What decisions are you seeing from your current clients as it relates to tax planning? And I think Scott brought up a good point earlier with the new TOSI rules and the ability to income split's been kind of taken away. So are you seeing anything different in relations to compensation planning maybe, and also for sale planning?
Well, actually, yes. We're one of the things I was saying to a client earlier is that we're seeing in the marketplace now, be it dental, I think especially in professional practices, but in a number of businesses, is that people have turned their minds to exactly what Kelly was referring to and what Scott referred to as well, that same process. One of the things that once we got past that initial panic in the early dates of shutdowns and lockdowns and changes and so forth, once we made sure our friends and our families were secure and that we charted a path forward, a lot of people have have turned their mind to how much longer do I want to be doing this? So I would say the first round of tax planning that I'm dealing with a lot of clients now is really looking at getting that company ready for a sale. Maybe not next year, maybe not the year after, but certainly in the 3 to 5 year range. So we're looking at making sure that they qualify for that capital gains exemption, and some of that means taking some of the money out of the company. And there's a number of different tax advantage ways of doing that, whether it is by some of the capital gains planning that you may have seen or may have heard of recently, or using a holding company, and really looking at can we take the business, maybe put in place a family trust, allowing multiple family members to benefit from the sale, and allow the sale to benefit from multiple capital gains exemptions. So really that working with the business that 2 to 3 years in advance and getting things tidied up. Also at that same thing, going from the tax planning to the business planning side of things, really looking at the getting that business firmed up. What I mean by that is a lot of things, even Kelly mentioned it earlier, making sure you have your associate agreements in place, making sure that for the next couple of years that some of the more discretionary expenses that owners sometimes have in their business are limited, and we're really focusing on making that business shine to its fullest potential when we go to start talking to buyers. So that's the first round of, I'll say, tax and business planning. The second round of planning is really focused on, now that the TOSI has been expanded, now that income splitting with spouses has been reduced, and there's a lot, and that they've really curtailed on the ability to invest inside of a company, is really looking at how that dividend compensation mix comes together. There's been a shift more to salaries over the last while, looking at opening up future planning opportunities such as retirement compensation arrangements, individual pension plans, and those formats of compensation. And the other thing that's focused right now, which is somewhat new into the Atlantic provinces, is looking at, are we able to structure an extraction of wealth from a company, taking advantage of capital gains rates versus dividend rates. And that's had a lot of commentary and a lot of pickup by our clients over the last year and a half. A number of them looking at it to fill the void that's been created where their tax planning with their family trusts and splitting with spouses had been previously. So those would be the main two buckets that are there, getting things ready, and then dealing with some of the tax planning opportunities that may exist for a relatively limited amount of time, until, as they say, the tax rates are changing again.
Okay. Thank you. Back to Scott. How would you define your experience with your deal with dentalcorp?
I would define it as a positive experience. I'm done that part of the deal, and it certainly was something you have to go through. It's, again, it's my baby, and it's all about how you, in my mind, how you feel. And what I mean by that, I'm kind of an emotional type of person, and it's how you feel when you're practicing, how you feel when you're kind of participating in your business. And I still feel like I own the business, even though I've taken the cash off the table, and I still have the ability to make cash. So that's very positive for me. I feel I'm part of a really good company. So I think that's good. I own shares in the company, so I'm an owner, part of the company. And I know that talking to some of the people who've been in dentalcorp for longer than I have, I've really got to know some of them, and I have known many of them a long time. We had a meeting here in Atlantic, Canada in the bubble. We were able to have quite a number of people go to an event. And at the event, I would realize that some of these people had their shares, and their shares were worth more than what they had received for their practice now. And they had received a good amount, but now the shares were worth more. And I think that is exciting for me as a part owner. So I think that the experience has been positive. There's a lot of qualitative things that I've received back, whether it's advice from different people, but hiring, so having Kim, I think it was Kim View, and she had a person in my office helping me as a dental assistant when I know that there's 23 people looking for a dental assistant in Halifax or Nova Scotia. So I was able to have someone in my office in the next couple of days and having an interview and hire them. And that's very powerful. Or having an associate. I was able to get an associate, a very high quality associate, and Julie was able to do that. So it's like these people are working on my behalf. So that's been very positive. If you look at the transactions and the legal thing, I like to leave that to my accountants and lawyers, because I'm not that interested in that. I'm interested in kind of getting to the other side and being part of a bigger operation. And, let's face it, if I needed a root canal, I would go to an endodontist or someone who's good at them. You need to kind of go and use the people that are good at it and do what you're good at, so you can feel good about what you're having. But I would say that it's a little bit stressful because you're going through a transition. But the same thing, when you get to the other side and you're having a drink online with your new company and sharing emotional times, and I took the time to actually go out and talk to people who weren't in Atlantic Canada about their role as a partner, as a dentist, and how they've been treated. And before I even got started, that's what I did. So I think it's been very positive. There's going to be some stress. You're going to have to collect all this stuff and do all these different tasks, but leave it to your professionals. Don't try to do too much, or you'll kind of beat yourself up. Because the goal is really to be an effective dentist, an effective leader, effective parent, and to be someone in the community that's doing your part. And so I really don't have the skills and expertise to do some of these things, but at the same time, I know that I want to feel good as a person and get what I built. I want to get some value for that. And so I did get that. That's kind of where I am, Chris. And I'll pass it back to you. Maybe, I think I was probably talking too long anyway.
Yeah, I was going to say I'm willing to bet that Rob Kelly and I would all say that if we needed anything fixed in our teeth, we would not try to do it ourselves. So that's why you pay professionals.
Yeah, well, you come and see me after you do that.
Exactly. All right, back to you, Kelly. What challenges do you see for small businesses or specifically dentists in Canada in the next year?
Sorry, I'm still laughing. Chris, are you saying the old string on the doorknob doesn't work?
Yeah. Or the hockey stick?
That's right. Yeah. So challenges. I mean, honestly, I'm seeing more of 2020, and I know nobody wants to hear that. I mean, we're in December. Everyone wants just to say goodbye to 2020. But the reality is, we're looking forward to a vaccine, and I think things are going to get better, but it is going to take some time. So a lot of the challenges are going to be pretty much the same things dentists have been struggling with for the last 9 months. Things at practice level, just logistics, trying to stay efficient. Obviously there's been challenges that every dentist has faced in terms of not just staying efficient, but being faced with potentially being less efficient this year, and just not being able to see the number of patients that they would have seen pre-COVID. So I think that's going to be continuing a bit. Scott touched on it earlier in terms of some of these government programs, I think the government is trying to do the best they can, no matter what your political stripes are. I think we can all, agree on that. But sometimes there's unintended consequences with these programs. So he mentioned CERB and some of the others. But I mean, whenever you're faced, whether you're a dentist or any business owner, when you're faced with a government program that pays someone $2,000 a month to essentially, I hate to say it, kind of sit at home and do nothing, trying to get someone back to work is a challenge. Either they're making $4,000 a month to work versus $2,000 a month to do nothing. A lot of people would just pick the $2,000 to do nothing. So, and Scott touched on it earlier. I mean, there's usually, or at least within Atlantic Canada recently, there's been a shortage of dental hygienists and dental assistants. So I think that's going to be even, unfortunately, still a challenge. It's probably gonna be worse than it was in the past, at least for a bit of the foreseeable future. Not only trying to attract staff, but to retain them. And because they're whether we like it or not, there's going to be future waves of COVID. There's going to be future pandemics, and all of this stuff creates headache and stress for everyone, but dentists in particular, because you're dealing with this stuff at home. And then you go to work and you're dealing with it all day long. And I don't care who you are, this stuff is stressful. You're losing sleep. It's not an ideal situation. But to put a positive spin on it, I don't want to be a downer. But there are some things you can do. Again, it's about controlling what you can control. You can't control future waves of COVID or future pandemics, but you can control what goes on at practice level. So, just think of, and we talked about earlier about, getting your house in order, not just for a sale, but just trying to figure out ways to increase efficiencies and to, promote a safe and healthy environment for your staff and your patients. Because even if you feel like your practice is safe and healthy, that doesn't mean your staff feels the same way. And, I think a lot of challenges dentists and business owners from all industries are having is that, if someone was going to call in sick back in 2019 pre-COVID for no reason, there's a lot more reasons to call in sick now. And, if you promote a safe and healthy work environment and try to put yourself in the staff shoes and your employees and try to figure out what, if I was them, what would I want to have happen in the practice, and maybe implement some changes that would bring about some positive change, I think that would go a long way. And because if you can, we all know if you have a good team working for you, your life is peachy. If you don't, like even if you have one bad apple employee, and they're going to cause problems for you, cause you sleepless nights. It's just the way it is. So, focus on your practice. You can't control a pandemic, but you can focus on what's going on at practice level. And if you do that, you don't have to worry about the pandemic, because you'll be in a better position to adapt to future challenges, whether it's a pandemic or future sale or anything.
Thank you for that. Okay, back to you, Rob. What factors should clients consider, especially during the pandemic when they're looking to sell?
Well, Chris, I think we've covered off quite a number of them from a pragmatic point of view, from what I've said previously, what Scott said previously, and what Kelly has said previously. So I think we've got a good sense of some of those practical things about focusing on your practice, focusing on risk management and that sort of thing. So let's just take that question to a slightly different level in that. I think the first thing you have to do is understand your own motivations, why it is that you're looking to sell, what it is that you value in your practice, and understand those core values that you have about your practice. From there, once you understand that, the first thing that you want to focus on, and it's the same thing with before practice, but everything becomes more important. Everything we did before, I think this is what Kelly was even alluding to, everything we did before is even more important that we focus on those key issues now, that you find a fit with the buyer that you're looking at, or that matches up with your values and how you approach your clinic, how you approach your care, how you approach your patients. It really is important to have that synchronicity of objectives and values. If you don't, it's not going to go well, and it's not going to have a good outcome for anyone. The next thing is understanding that same fit, is understanding that the alignment between your employees' values and their feelings towards the practice and that buyers. Again, as with any business sale, if your key management, if your key people aren't on side with a sale, it just becomes a nightmare. It usually falls off the rails, and we end up people leaving frustrated, and a lot of value lost throughout that process. So once you've got the fit, you've identified sort of the buyers that, or at least the profile of a buyer that makes sense for you. You understand your employees and make sure there's an alignment there as well. The next thing I think is a fit with your professional team. I think there's all sorts of people that are available in the marketplace that are out to help. All three of us are professional advisors that work with dentists and other businesses every day. It's really important to make sure that you're dealing with someone who has experience, someone who is able to sit down and understand your values and needs and your objectives from the transaction, and not just, well, I know how to sell a dental practice better than you do, so get out of my way. We see that, and there's all types of people for everyone, but you really have that alignment with and trust with that professional advisory group that you have, so that you can communicate to them what you want, but even more importantly, you feel that you're being communicated with in a fashion that you are comfortable. There's no such thing as you don't feel that, oh, I can't ask that because it's a stupid question. There's no such thing as a stupid question when it comes to the sale of a business or the next stage of life of, as Scott put it, of your baby as they're growing and fledgling into the next its next iteration of its evolution. It's really, really important to nail all those three things before a pandemic, but especially during a pandemic.
Yeah, and I think the most important thing, Rob, that you just said is understanding what the client wants at the end of the day.
Absolutely.
Yeah, because you can put you can put a really good tax plan in place, but at the end of the day, if it doesn't accomplish what the client wants, it's not a very good plan.
It's remarkable the number of people that do a double take when they come in and they say to me, my first question is always, what is it you want from this? What's your goals and objectives? How do you see this? Invariably, coming to a tax guy, the first thing they say is, I don't want to pay any tax. Once we say that's typically illegal, and that you could put it in a small paper bag and unmarked bills and head for the border, although they're all closed now, so that option's out too. So we're really kind of stuck with actually playing within the rules and figuring out, how do we get to that spot that, the person looks back, much as Scott has right now, and saying, you know what, it's kind of worked. I'm happy.
Right.
If we can get to that, our clients are happy after a transaction is done, in 2, 4, 6, 8, 10 years afterwards. Well, that's pretty cool.
Yeah, absolutely. Which is a great segue into the next question for Scott. Scott, what suggestions would you have for someone who's considering a sale or a partnership?
Well, I think that it goes, Chris, to attending things like this. I wish I would have had some time to listen to these professionals, so hire professionals. I think that's a real biggie, because there's people who have insight. There are lawyers, and then there are lawyers that know about this type of deal. And so you need to find a person that kind of is educated about what's going on here with what we need, and not just any lawyer. Or I think there's a specialized type of transaction that's occurring here. I think also that consultants are good, and people that can talk to you. But I think some of the things that I did was to talk to other dentists that were already involved. Say, tell me what the good is, what the bad is, what the ugly is, you know? What's going to happen? How am I going to be as a person when I'm in my office and working on day 100? I can't say day 1 is going to be exactly where I'm going to be, but day 100 in my practice when COVID's all gone, what's this going to be like? And can I be part of that? Can I do my thing? It's about autonomy at the end of the day, because I really don't feel like my role has been hurt. It's been enhanced. And so the enhancement has been, you know, hiring people or having help, or even my office manager. If you don't have an office manager, this is like you're getting an office manager in your office. And even if you do have an office manager, she loves it. She thinks this is fabulous. And so having that positivity is really important. But realize that this is probably going to be one of your biggest decisions in your life. And it's going to be anxiety producing and emotional. And it's going to be also, I think, a relief. You know, it makes you feel like you know what your direction is, because there are milestones in your life, and getting out of practice or going in a different way. I don't even like to think about it, because I hope that I'm here forever, but I know that's not the reality. So I still feel like, as I was saying earlier, I still feel like I own the practice, but I don't. And so I'm going to wake up and I feel like I'm still a big part of it. I'm still the leader. I'm still the person, you know, that's in charge, and my team respects me. And I think that they now are seeing that, as I told them, I don't think a lot's going to change for you. You're going to be paid by a different person, not person, but entity. But really, hopefully you flourish as well. You know, the team is going to have more educational activity. I've already been involved with Gary Glassman with, you know, that's one of my babies, is I like teaching other people what I know and sharing and learning. And so that whole aspect is opened a whole new door as well. So I think you need to get involved and find out some information. Call someone, go to the website. It says right on the website, contact anyone in the corporation. And you learn that the corporation is also one of the top managed companies in Canada. That says something, because I look at the people that I saw like at different meetings, and like whether it's, you know, and I'm name dropping, but I do, you know, I look at my phone now, it's full of dentalcorp people like Julian, or who, you know, or different people that are telling me stuff that I'm going, okay, that helps me a lot as a dentist going through COVID stuff, because like I remember he interviewed an infectious control person. I watched that about 3 times because it made me have some sense of peace. So I'm saying, okay, I'm going to be okay. I'm going to be fine when I get into my office and be functional. That strength of people is very, very important, and having the right people on my team. I'm part of another bigger team, but I feel that they've joined my team, but really I've joined the other team. So I think that find that out, find out what you want out of your own practice, find out where you're going to go, because you know, you're not going to be there forever. I like what both Rob and Kelly were saying about there's some real things that they touched on, and I do feel that the Canadian government, Kelly, I do feel that they've done a great job in keeping the economy going and keeping things, you know, moving. Nova Scotia has certainly flourished because of our government. So I think that this fits very well for me in my own position. Maybe it's not the right fit for everyone, but I think it's certainly a spot you should look to dentalcorp and do your comparisons, do your analysis, talk to professionals. This is a time to spend a little bit of money. Stitch in time saves 9. So talk to people so that you can, you know, get what you need to make this decision, because, you know, you make decisions on diagnosis all the time, and so you need to do some diagnostic work here and understand what's best for you. And so that's what the important thing is, what's best for you. So I'm happy that I joined this, and I'll give it back to you, Chris. I'm probably talking too long again, but I'd like to thank you for inviting me to express some of my thoughts about this transaction. But it's been positive, and I think that do your homework, and I think that you'll find that it's a great company.
Well, that's great to hear, and I don't think that you're talking too long at all. I think that there's probably a lot of people on the call right now that are very happy with listening to your insight. So thank you for that. Kelly, back to you. How have transactions changed throughout the pandemic, and what do you predict over the next couple of years?
Well, I mean, there has been some changes, and I kind of foresee that the things that have changed are going to continue on for the foreseeable future. So once COVID hit, things are just taking longer. And, time is money. So there's, things are taking longer, but the way that transactions are done has changed a bit. And we were seeing this pre-COVID, but we're seeing more of it now. So there's more online, not only meetings with your advisors, but documents, you're signing things online, like you're not actually meeting with your lawyer to sign documents. You're doing everything online. So get used to this Zoom type of stuff, because you're going to be using it for as part of your transaction, chances are. So there's that, and my view is face-to-face meetings are always the most efficient. And so there's going to be a little drop in efficiency. Things are going to take longer for your transaction. But not only from like just the logistics side and meeting people and meeting with all your advisors and getting documents signed, but there's going to be more extensions. If we get another third wave or another pandemic, things are maybe in the middle of a transaction, and then you got to kind of put things on the back burner and kind of wait it out. That happened a lot this year, and I wouldn't be surprised if it happens, within the next year or two, as we kind of go through this roller coaster. And kind of I mentioned things are taking longer. So, what does that look like for you? If you're buying, you're going to be looking for a lot more stuff. If you're selling, the purchasers, COVID has affected, revenue and financial statements for most practices. Most dentists aren't immune to kind of the negative consequences of COVID. And, for a purchaser, the big thing is, the income of the practice. How's the practice doing financially? So because of that, I mean, everyone knows that, or is hoping that this is just a blip. So, if your last 3 years of financial statements were great, most purchasers are going to expect that there has been some hit to your revenue in 2020. But still, because of that, because there is a bit of risk there and nothing's certain, they're going to, Rob mentioned it before, they're going to be doing a lot more digging. They were digging a lot before. They're going to do a lot more digging. They're going to ask you for a lot more things. If you're purchasing, the bank's going to be asking you for a lot more things to get your financing approved. So it affects both sides, both seller and purchaser. And I guess part of this thing, I talked about things are taking more time, less efficient, but that also is going to have an effect on you in terms of more stress. I always, if someone comes to me, a dentist, and they want to, buy or sell a practice, I always say to them at the first meeting, these transactions aren't warm and fuzzy. I wouldn't characterize them as fun. And I'm not trying to, take a jaded view of these transactions, but there's a lot of work to them. It's not like buying or selling a car or buying and selling a house. And anyone that's bought and sold a house, like that takes over your life. It's weighing on, you're thinking about it all the time. There's a lot to it. Dental practice, buying or selling, is a lot more work than that. And the reason it becomes stressful and causes so many headaches is because you're dealing with these issues first thing in the morning, late at night, on the weekends, because you can't deal with these issues between 8 and 5 when you're seeing patients. So there's only so much time in your day, and these transactions, they take over your life. There's no sugarcoating it. But at the same time, you know, we can put a positive spin on it. And the way to put a positive spin on it, and, you know, Rob and I have kind of been harping on this, but, you know, it should be repeated because it's very important. You know, even though there may be more stress over the next couple of years, not just with transactions, but just living life generally. I mean, everyone's more amped up, stressed out. It is what it is. You can't control that. But again, if you try to control the things that you can control and plan early, if you're selling a practice, you're still going to be stressed out as, you know, whether you're buying or selling. There's a lot to it, but you're going to be better suited to adapt to things that happen during the transaction, because that, you know, whether you're buying or selling, I always tell dentists, you know, there's going to be hurdles and challenges that arise in any transaction. Nobody has a crystal ball. You may think, okay, you know, me and the other, you know, if you're selling, me and the purchaser, we've sorted out all the issues. We've talked about this for months and months and months. Everything's good to go. And you tell your advisors, you know, everything's good to go, just paper it. But there will always be things that come up that you don't foresee. And, you know, whether it's something is, you know, whether it's some sort of delay or something more extensive like a pandemic, if your house is in order and your practice is in order, when I say house, I mean practice, obviously, but if things are kind of running efficiently at practice level, you're going to be in a lot better stead to get through these challenges as they arise. And those challenges that were always occurring in the past, I think there'll just be a bit more challenges in the next year or so. But again, it doesn't have to be a negative thing. You can put a positive spin on it and just, you know, get all your ducks in a row, and you'll be thankful for it down the road when you're going through a transaction.
Thanks. That's great, Kelly. Final question for you, Rob. What is the accounting due diligence needed for a sale? And in your opinion, how does this differ if you're dealing with someone like dentalcorp or you're dealing with a private buyer?
The due diligence process is, we've sort of alluded to it a fair bit throughout this. It's really that the buyer is able to come in and verify those things that they've been told throughout the purchase and sale process. You know, in this, the vendor makes certain representations. They say they have certain volume of clinic. They have a certain mix of within their revenue of hygiene and dentistry, and you know the buyer relies on those and comes to a point where they're saying, okay, if everything that you've told me is true, then I'm willing to pay this for it. What the buyer then has is a period of time between having sort of made that offer to go in and check if what you're saying is supported by the data that your accounting system and your practice produces. Are they able to see that what the wage costs are, what are all the things that they had talked about producing, really get a understanding of the actual business mechanics of the practice. So that's the biggest thing that's there. I think the biggest difference when you're dealing with an organization such as dentalcorp versus a private buyer, summing up in one word, I would say experience. And what that translates to is that the dentalcorp experience, and when they're coming in and looking at, they have a fundamental understanding of practices. They've looked at hundreds and hundreds of practices all across Canada. They know exactly what they need to see. They know exactly what they need to do. There's no sort of wastage of time and effort in extraneous figuring things out. They have that. Their team that they bring to the table when it's looking at doing the deal is very knowledgeable. They're able to speak to the questions and concerns on all levels, and they're prepared for it. That is the biggest part. On a private sale, you tend to have more of an experience where if it's the first or even second, or even third purchase that a private buyer is doing, a lot of that they're learning that process as they go. Sometimes at their expense, and very much times at yours, where they are kind of, I'll say, fumbling around in the due diligence process. They are kind of working their way through and understanding how their financiers and negotiating with the bank. So it tends to make it a longer, and I guess in the context of the discussion we've had previously, it can be a more stressful process when you're dealing with someone who's trying to figure it out as they go.
Great. Thank you very much for that. So that wraps up all the specific questions I had for the panelists. We did have a couple of, I don't know if mail-in is the right word, but we had general questions from the audience that when they were registering, and we've picked a few. So these are almost like a lob ball, and any one of you can take them if you would like. As more practices come up for sale, and considering the effect of unemployment on dental practices, do you see practice prices lowering?
I'll chime in there for a moment and actually ask Scott to start. Can you just say, we had sort of somewhat different interpretations when we had bandied about this question beforehand. How's it affected your practice?
Well, it's one of those things where unemployment, to me, when I first heard it, meant to me in my own practice. And so I've had a challenge keeping people going. And I know a lot of dental offices in Nova Scotia, the problem has not been people going to the office. It's been the teams being able to manage the stress loads and the issues of dealing with multiple stressors in life. Having a significant stress on the outside of your life, and then having significant stress that you already had going into the pandemic, and putting that together had an issue. So if I look at what the demand is in Nova Scotia anyway, we're up in terms of people wanting to come and see us, and they want to get healthy. They're focusing on that component. So I see that as, if the numbers are getting better, that should put your practice up. So it depends on how you're leading your team through this. And it's been a challenge. I must say that's been the biggest challenge, is trying to keep within the practice, to keep it going. And so I think that if you can keep it going and keep people engaged and understand not to push them too hard. If I've learned anything, is maybe don't push them as hard as we are. We're trying to meet demand and back it off a little bit. So I think that there's going to be more demand in travel. There's going to be more demand in restaurants. People are social. I'm positive. I think this is right now a kind of a two-tier type of problem. Like you have two bell curves. You have this curve making a lot of money and this curve making none. And I see them moving back together. And I see that that's going to be a positive thing in my mind for value of practices.
I see.
One of the other things that you had mentioned the other day was that you're seeing more people invest in themselves. I think you just touched on it there. Although they're not taking that the trip to the south, maybe they're not taking as many dinners out. They are taking the time when they have the availabilities, as I think you mentioned the other day, to say, hey, we've been talking about it for a couple of years now that I need to get this root canal, probably a crown on this tooth. Maybe we should be doing it now as opposed to later when they've got the time to recoup and recover. So I think that's something I've been seeing in a lot of practices across the people I've spoken to, that there's a shift in demand, that people are investing in themselves, and that certainly there isn't people staying away from dental practice. If anything, there's a pent-up demand that's there. So how that in turn affects the values, that practice is still generating a lot of cash flow. It's still doing what it's responded well to the pandemic. Patients are comfortable coming into the practice. A well-managed practice that has a good rapport with its patients and has that continuing flow through of profitability is going to, if not maintain value, probably increase in value. In contrast to a practice that hasn't been able to adapt, to be able to have that good rapport with their staff and their clients, and have that good experience, we're going to see that practice go lower. But again, same thing that we would have seen previously. Guy, you've been pretty quiet through all this. I know you've been sitting back and letting us ramble on here, but maybe you'd like to chime in as well.
Hey, thanks, Rob. Quiet because very little to add to the great commentary. Yeah, I mean that's the $17 billion question. Where are practice valuations going? And look, when you think of valuations of a dental clinic, as with any business and as with most things in life, valuations follow a bell curve, where the cream of the crop, the best dental practices are going to garner and invite a multiple, as you suggested, Rob, towards the front end of that bell curve, and a whole bunch of practices are going to be in that middle, and those practices that aren't the premium ones for a variety of reasons are not going to be at that same level. The real question is, how has COVID and the long-term effects that remain to be seen, how will that shift where that bell curve falls along that axis? Will it drive kind of the average multiples forward, keep them steady? Are they going to fall backwards? And not to get too academic, there's so much uncertainty, as you alluded to, Rob, that remains to be seen. From a macro perspective, as Scott mentioned, other than in dentistry, unemployment is uncharacteristically and unsustainably and artificially kept low. Eventually, the number of people who are entering the job market to look for jobs is going to increase when CERB dries up and other programs dry up and other industries continue to falter or even remain underperforming. And so unemployment has macro effects on the dental industry, everything from benefits to disposable income, and certain parts of the country are going to feel the effects of that macroeconomic change more than others. There are industry-specific elements to valuations of practices that are going to have an effect, from a competitive landscape to the prevailing sentiment of dentists, the number of those who are looking to sell. Your typical demand-supply equation. Today in today's environment, given the uncertainty around, I think younger individual dentists are having a harder time finding financing. We keep pretty close contact with banks and lending partners across the country, particularly those active in the professional lending space. And they are being very transparent that gone are the days where all you have to do is show your valuation report from evaluator and they're going to stamp it with a loan for 100% of the purchase price. They're going to ask questions. They may lend less than the purchase price, which means you've got to dump some equity into it. They may not lend at all. And so, those without the strength of a balance sheet or without the strength of financial backing are going to have a harder time. And so you may see some individuals pull out of that buyer market, depressing demand. Even those in the consolidator space, different financing arrangements will dictate their own ability to transact deals. And so, you've seen over the last 12 months, some wind taken out of the sails of the number of buyers who are willing to transact. That's going to have an industry effect on valuations. And exactly as Scott and both you and Rob mentioned, the practices themselves have had different experiences coast to coast and even within the same geography. So practices like Scott's, which are premium practices, they're not going to have a hard time ramping up. They're not going to have a hard, not to take away from the challenge, but they are better suited to open up, rebound, and capture that pent-up demand that we've seen across the industry. But other practices have been fared as well. Other practices aren't as resourced as well. And so their recovery hasn't gone as well. Hygiene in a lot of pockets of the country remains significantly below pre-COVID levels. Lots of practices, as Scott mentioned, are having a hard time finding staff because some of their staff didn't want to come back. And so while it's fantastic to see, and we love to see Scott's practice doing as well as it's doing, I'm not sure that's a universal experience. We know, for example, for a fact, staffs are demanding higher wages to keep up with the increased workload that they have. And if you're lucky enough to have a full supply of PPE, you're probably paying more for it than what you did last time. So the macro, the industry, and the micro effects of COVID have created a very convoluted picture. And I think what we can all feel confident about is the dust has not settled. So much of the economy remains inflated or propped up by government programs, and so much of the recovery of the dental industry is a reflection of pent-up demand. And all of this kind of ignores the likelihood of a third wave. And so the short answer is, who knows? The long answer is there's a variety of factors that create a high degree of uncertainty. And as you mentioned at the top, Rob, uncertainty means less buyers willing to do the things they're willing to do before that. And so I think the short term, you're going to see some depression. Long term, it really depends, I think, on 2021. It depends on how the economy rebounds, more broadly speaking. And it depends on, again, the extent to which this country decides it wants to get vaccinated.
Right on. Okay. Again, another lob question. How do you determine goodwill of a practice?
We usually refer to it as magic. It's a combination of everything that we discussed this evening. It's coming down and being able to mathematically attribute a value to how a practice does better or does less well. And we often talked about in terms of a multiple that the practice generates a certain cash flow, and from that there is a multiple of that earnings that is willing to be paid. If there is greater certainty, then a higher multiple of that is typically paid. If there's higher uncertainty, the lower multiple is paid, and if there's a lower uncertainty, then a higher multiple is paid, which is kind of a condensed version of many of the value situations that we've talked about here. Guy, you were talking about the other evening how the value, sort of the prospects of value coming in and into the pandemic, and how that has ticked along. I may be skipping ahead in the conversation, but I think that's relevant to the discussion on goodwill as well.
Yeah, and absolutely, and those things have been a little bit, I call it evolved or informed since pandemic. But you're always looking at the factors that create, from our perspective, a great dental practice. And when you think of how you value dental practice, yes, there's equipment, there's leaseholds, and some of those things obviously you look at and you factor in. But there's a lot of those intangibles which really captures that goodwill. Everything from how many different dentists are steady, stable providers in the practice, which creates a sense of stability in projected cash flows, a sense of stability in the patient base, a sense of stability in the practice in general, versus one individual who comprises 100% of the dentistry that's being performed. From a facilities perspective, is it sizable? Is it able to capture the capacity that it needs to be successful? Is it in a location that's conducive to growth? So all these sort of factors, both in terms of the practice composition itself, the staff, whether they're well trained, engaged, or has there been a history of high turnover, are they understaffed, overstaffed, et cetera? All these things that you look at to say, is this a practice that, forget the equipment, think about the people, think about its prospects as a going concern that invites the kind of premium that people would want to see their business being valued at. Those are all things that we take into consideration.
All right. So just in the interest of time here, I've got one last question. And again, it's a lob ball question. How do you see the industry continuing to change as the pandemic progresses, and when do you expect dentistry to return to quote unquote normal?
Scott, I think you've got the best qualifications of the group to speak to that.
Well, I think that normal is it's not something I would use right now, but maybe it's just going to be a new normal in the future, but I doubt it. So I see the vaccine. Once we launch the vaccine, then that's going to make a huge forgetting factor, because people want to forget 2020. Okay, so what you're going to see is, I believe that people start to take the vaccine. I have all kinds of people saying, I want to get on a plane, I want to go somewhere, I want to do something, I want to go out to restaurants, I want to go interact with other people. And it's a lot about how people will bounce back to interacting and communicating with each other. And if that follows what I think it will, I think that you're going to have a really fast rebound. So I think the V for vaccine is also what the economy is going to look like. In my mind, it's going to be a V bounce back after the vaccine. And maybe I'm too Pollyanna, but I do think that the way that this is going to churn cash flow is that you got to get the cash flow started at the lower ends of the economy. And I think that that's going to be how fast that comes back is going to be what's going to happen with dentistry. You're going to see dentistry, in my mind, there's going to be people that are doing emergency care. There's going to be people that are going to do advanced care, because there's people that are killing it right now in their stock portfolios and their businesses, and there's other businesses that are not doing so hot. So you're going to see a dichotomy, and it depends on what your population of your patients are in that dichotomy. And referral-based dentistry is going to go up a little bit, and but I think that asking people the fundamental question: how are you doing in your family? How is this affecting you? How's COVID working for you? And not focusing on the safety of your office. They assume dental offices are safe. There's not been really a lot of COVID sent through dental offices. According to the American Dental Association, there's been none in the United States. Now, is that true? I don't know. But if that's true, then we're seeing a rebound happening faster with dentistry, because people will trust it and focus on what the patients themselves are feeling like and how they're focusing. I think that's what's going to bring dentistry back.
Thank you very much for that, Scott. That's all of the questions that I have. Does anybody have any closing remarks? All right. Well, I would like to thank all of the panelists and Guy for chiming in when required. And thank you for your time. Thank you for your expertise. And I think tonight's session has been very informative for everybody that was in attendance.
Thank you, Chris.
Thanks, Chris.
Thanks, Chris. Thanks, everyone.